Hello friends, welcome to this November update on asset allocation and fund of funds. As we have mentioned earlier, it's important for an investor's portfolio to be diversified across at least 4 asset classes, namely domestic equity, international equity, fixed income, and gold. The ABSL Asset Allocator Fund of Fund crystallizes our fund house strategy and gives investors a one-stop shop to access these 4 asset classes. In equities, we diversify across both domestic equity and international equity. We follow the core satellite approach, where the core consists of large cap and diversified funds, consists of satellite and thematic funds. On the fixed income side, the core investment is typically in high quality papers and low to medium duration bonds. In gold, we invest in the gold ETF. The idea is that providing access to these 4 asset classes reduces the overall portfolio volatility and increases the chances of getting higher risk adjusted returns. Now, coming to the portfolio, currently in our asset allocator fund, we have about 45% allocation to equities, out of which 40% is to domestic equity and 5% is to international equities. We have a 41.5% allocation to fixed income, a 12.5% allocation to gold, and the rest is in cash. In the equity portion, the core, like I mentioned, is the large cap and diversified funds. The large cap funds account for about 20% of the equity allocation, and the diversified funds account for about 30% of the equity allocation. Small caps are 10% of the equity allocation, thematics are 30%, and international is 10% of the equity allocation. On the fixed income side, the investment is mainly in the low duration bond and corporate bonds. And for gold, we have invested in the gold ETF. Now, the reason we have maintained our equity allocation at around 45% is that even as we have a cautious view for the short term, we remain constructive on Indian equities for the medium to long term. The Indian economy is recovering very well. We have seen very high festive spending, and all the high frequency indicators are showing that the economic recovery is on track. In terms of performance also, the ABSL Asset Allocator Fund has been very consistent and has been in the top quartiles in short, medium, and long time frames. Over the past 1 year, the ABSL Asset Allocator Fund has given a return of about 35% compared to the benchmark's return of about 29%, and the fund has been ranked among the top 3 for the past 1 year, 3 year, and 5 year basis. Some of the key funds that have contributed to performance are the ABSL flexicap fund, the ABSL equity advantage fund, the ABSL small cap fund, and the S&P 500 ETF. The ABSL flexicap fund, going by the name, has full flexibility to invest across market caps and sectors. Typically, it invests about 60 to 75% in large caps and the remaining in mid caps and small caps. This flexibility has allowed it to identify winners like ICICI Bank and HDFC Bank in the banking space, Infosys and HCL Tech in IT, Tata Steel, Hindalco, and NMDC in metals, and many other stocks that have performed well. The second fund is the ABSL Equity Advantage Fund. This is a large and mid-cap fund, and it can be seen as a more aggressive, diversified fund. It typically invests 50 to 65% in large caps and 35 to 50% in mid and small caps. This fund has a growth style, and we have seen that the key contributors over the past year have been IT companies like Apple and Mindtree, oil and gas companies like Reliance Industries, JSW Energy, and Adani Gas, and auto companies like Tata Motors. The third fund which has contributed to performance is the ABSL Small Cap Fund. This fund is a pure play in small caps, and it follows a bottom-up stock picking strategy. And the idea is to select companies that have above average ROE, which are generating positive cash flow from operations and can create wealth for minority shareholders. Some of the unique names in this fund are Trident in textiles, Happiest Minds and Persistent Systems in software, HEG and Graphite in metals, and Linde India and Prince Pipes in industrials, and all of these stocks have contributed to the fund's performance. Lastly, like I mentioned, the S&P 500 ETF gives us international exposure, and given that the US markets are at all-time highs, this ETF is also given a good positive contribution to the overall performance. I hope this gave you a good update on asset allocation and fund of funds. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.